Good day, dear traders. Let us review the economic events of the past week. The US dollar index slipped last week following Janet Yellen's statement that the first since 2006 rate hike may be postponed. Weak existing home sales released on Monday produced additional negative effect. However, the situation stabilized on Tuesday. February consumer prices index added 0.2% after 0.7% drop in January. Market participants believe it significantly reduced deflation risks. Let us remind that the head inflation, together with the unemployment rate, is the main indicator the Fed uses in assessing the current state of US economy. Core inflation year over year rose 1.7%, marking the biggest increase since last November. The majority of investors decided then that the interest rates will be raised this year, but most likely the rate hike will take place in September or November instead of June. Other positive economic data offset adverse month reports. New home sales jumped 7.8% in February, the biggest increase since February 2008. After that, the dollar index didn't tumble, even as the drop in durable goods orders in February for the 6th consecutive month was recorded. However, weak durable goods orders prompted some investment banks to lower their first quarter GDP forecasts. This didn't affect market sentiment much, since the Federal Reserve doesn't attach much importance to economic growth yet when designing its monetary policy. US dollar index marked a slight increase on Thursday on positive weekly employment reports. The euro advanced on the backdrop of weakened dollar. Eurozone consumer confidence index marked an increase in March. We believe it is driven by the ECB bond buying program launch. It is worth noting that March manufacturing and services PMIs increased both in the EU and in separate countries. Labor market reports for March in US, due for release on Friday, are considered the milestone event this week. Unemployment is expected to remain at 5.5%, while non-farm payrolls are estimated to fall from 295,000 to 248,000. It is yet difficult to predict how it will affect the US dollar index. Events may develop according to worse is better principle. In theory, negative labor market dynamics may force the Federal Reserve to hike interest rates sooner. The tentative forecast for the remaining economic events due for release this week is neutral. Many banks and exchanges will be closed in Europe on Friday for the Catholic Easter holiday. This was all for the week. Thank you and see you next week.